Hi friends, today we are going to discuss different types of error that may encounter while auditing the accounts of business. We will discuss different types of errors along with the types of fraud and what is the difference between error and the fraud. But one thing, if you have not subscribed our channel, you are requested to please subscribe our channel Meri Talim. Thank you. So now we will discuss different types of errors. In accounting and bookkeeping, accountants or bookkeepers may commit errors while recording or posting transactions. Basic types of error in accounting are four. First, error of principal. Second, error of omission. Third, error of commission. And fourth, but not the last, compensating error. Now we will discuss what is error of principal. Error of principal occur when principles of bookkeeping, means GAAP rules, generally accepted accounting principles, or accountancy rules are not followed. Error of principal occurs, like posting revenue in expenditure account or posting repairs of any machinery in machinery account, and likewise. In case of error of principal, there is no effect on the trail balance. This is because the amount is correctly posted on both debit and credit side, but it is posted in incorrect accounts. So it is very hard to detect such type of error by the auditor. Second is error of omission. When a transaction is omitted fully or partially from the book of accounts, such error is known as error of omission, like not recording of purchases or sales in respective books of accounts. Where the transaction is totally omitted, it will not affect the trail balance and is more difficult to detect, and this can be located through watching technique of audit. And in watching, we means checking of each voucher in sequence. And then error of omission. This type of error occur when entries made in the books of original entry or ledger are incorrect, either wholly or partially. Such errors are the errors of omission. For example, posting from original books of entry is made wrongly, or posting from original book of entry is made in wrong account, or it is made in wrong side, or entry is made with wrong amount. And then is compensating error. When two or more errors are omitted in such a way that they neutralize the effect of one another, and this is referred as compensating error. Like the wrong amount of $500 instead of 5,000 is recorded in inventory account and is balanced out by same wrong amount of rupees 500 instead of 5,000, which was being recorded in accounts payable to pay for that inventory. This will not affect the trail balance, and it is so hard to detect by the auditor. Now we will talk about duplication error. As the name reveals, when transactions are recorded twice. When a single transaction is recorded twice, error of duplication arises, like purchasing computer once in a month but were recorded twice This will lead to error of duplication. Now we will discuss fraud. One thing I want to clear, that there is difference between error and fraud. Error is something that is not committed voluntarily or knowingly. We as a human being can omit errors, but fraud is something else. Fraud is that a thing has happened intentionally. An error committed intentionally is referred as fraud. Either it is created by accountant, top management, owner, or someone inside the organization. Fraud may include misappropriation of cash in an organization, misappropriation of goods inside the organization, under or overstating revenues or expenditure in the books of accounts, and last but not the least, secret assets not included in financial statements.